Kirk Tugwell here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, what's the point? What am I actually talking about here? I'm talking about points and buying down interest rates, and we'll deep dive into that here in just a second. Is it a good idea or is it not a good idea to pay the points? Is your loan officer being upfront with you? Are the lenders being upfront with you as to what are your closing costs regarding getting a specific interest rate? So that's what we're going to take a peek at here in just a second. But first, make sure you click on that like and subscribe button if you find these videos valuable. Let's take a quick look first here at just some of the recent things going on in our Twin Cities marketplace before we get into that rate discussion. All right, so looking at the showings per week per listing, median sale price range 250, 500K, jumps back up after the 4th of July holiday, 4.76 up to a 4.99. We can see last year did kind of similar jump. We see 3.44 up to 4.03. We still are tracking ahead of last year by 19% as far as that showing rate. Total number of showings is 2942 up to 3563. Now last year we can see that there were more showings. So how is it we're tracking ahead? Well, that's the big news out there. That's what's keeping our market going, and that is inventory of homes. Okay, so looking at new listings, we see new listings dropping off going into that 4th week holiday, and also pending sales slowing down, but that spread between last year is growing, 12.4% down in total inventory. So that's why we're seeing that showings per listing actually moving at a higher pace. This is keeping our market in a better spot than we were last year. We kind of had crossed into that stable market range and thought we were going to be doing something similar. But we can see we're kind of leveling off here. Last year was just 1 week where it was kind of level in the May timeline, and then it continued to fall. Now we're here in June into July, and the market is just not moving down at nearly the pace that we had experienced last year. I think there was a lot more fear about rates. Okay, so let's dive into rates a little bit here. So I did the thing about peak rates a week ago or a few weeks ago, that we probably had hit our peak rates, and then lo and behold, the very next week we see rates jump right back up very briefly. Went up to like a 722 national average here, and then within just a couple days drops right back down. So we can see here 6875. So I said, what's the point? What am I talking about here? So I'm going to jump over to a big lender that's out there advertising, and they're like, hey, come check out our rate. We're at 6.5%. Oh, wow, that looks really attractive in comparison to the 6.875 that we saw out there. Now, a couple of nuances here. They're saying $200,000 loan amount, and here, discount points, 0.875 in discount points. Now, basically, 1 discount point buys down your interest rate about 0.5%. So you could go from 7 to down to about 6.5 if you did 1 full discount point. So they're saying, hey, but to do that, it's going to be $1,700, and that's for a $200,000 loan amount. Well, they're trying to make this look attractive. Well, the thing is a point is basically 1% of whatever your loan amount is. So let's be realistic and say if you're looking at a $300,000 home, your buy down is going to be close to $3,000. So when I divided that out, $3,000, the differential in what does that 0.875 discount point actually get you? It gets you a reduced payment of $60 a month. It takes 50 months to get that paid off. So I beg to ask the question then, right? What's the point? It's almost better just to hold that money back, retain it, and use it for maybe doing a refinance later, or do something else with that money that may be more valuable, or just hold it back and you could subsidize your payment and just see what happens with interest rates. But the whole reason they do this is to just make them look good over the competitor. And maybe you don't want to be bringing an extra $3,000 cash out of pocket to do that. And I see lenders do this all the time. They'll put this rate out there that looks really good, and then you see, oh, I have to bring $10,000 extra to get that rate. So make sure when you're getting quotes, you're looking at what the discount point is actually going to cost you. Hopefully you found that valuable out there. Right now, realistic rates, what are we looking at? Yeah, 6.875 on the 30-year is what we are seeing. You can buy that down for 1 full point. This is coming from Bell to 6.375. 20-year mortgage is at about 6.75, and 15-year is at 6.49. So again, make sure that you have a loan officer, a company that's being upfront with you as to what the costs are. Really break it down. Make sure you're doing apples to apples comparisons. As always, if you have any questions, please feel free to reach out. Take care and have a great week.